Good morning, everybody. Christopher from Serene Education with my analysis this morning for the four majors for the 1st of May 2019. Okay, so Wednesday morning, then we're looking at the majors. In front of me, I have the matrix. So here again, if you just want to pause the video and have a look to see which ones are showing a bit more clear direction, we can look across here. The pound's looking fantastically well. For majority, especially the commodity crosses, pound against the Australian dollar, pound against the New Zealand dollar, and pound against the CAD looking quite good. CAD a bit more unsure on two fronts, but certainly the Australian dollar and New Zealand dollar, I would certainly look to see how the intraday time frames pan out, because we see a slight pause on those intraday time that we need to be aware of. Pound yen, not as clear cut. We do know that the Japanese market is on holiday, inverted commas. They're having a change in the emperor. The current emperor has stepped down after service, and they're having a new emperor introduced. Can't think of the word to use. So yeah, the Japanese market is going to be quite subdued for the remainder of this week. You can see that the number of pairs against the yen have clearly strengthened intraday, but that pound yen cross on the long term is still a bit uncertain. The S&P 500 looking good. The DAX looking good. The FTSE somewhat good, but there's clearly some issues here with the daily and 4-hour time frame. VIX looking strong. Bitcoin looking good. There's still a pause on the upside, so clear there again. If you're trading cryptocurrencies, just keep an eye on that to start with. But euro against US dollar is my first one, and if you look at it straight off the matrix, you can see the euro against US dollar. There is a divide. When I say divide, you can clearly see that long-term aspect has been one of negativity, and the intraday is one of upside. So there again, that's a concern. So there's clearly some sort of pause taking place. We have seen the last month or two a breakout of a consolidation, especially below a major moving average level. However, we're seeing a pullback against the overall direction. So there again, we need to be aware of it. So I'm going to spend more time going through those ones in particular. So without fail, let's start with the euro against US dollar. So let's bring up the euro against US dollar. Always starting with the monthly time frame. I'm going to apply my Forex Made Ezee template to this time frame. Refresh the chart, ensuring that we have enough data coming through. Just going to zoom out a bit so we can see a bit more of the chart. Okay, so we have to ask ourselves a question. What has price been doing recently? Have we come from a high point to a low point to a high point? Are we in a trend? Are we in any consolidations? Are there any obstacles in terms of support and resistance levels that have been pronounced for long periods of time that it could influence price? And there are a number of them on this particular chart. So the first one is we clearly comes from a high point through 2018. We've fallen. However, that fall has been quite subdued here on the hard rate edge. And you can see a lot of volatility on the wicks. The candlesticks have got smaller. The wicks have become more pronounced. So there's clearly a lot more speculation or speculative trading taking place as we head into the new year. If you look at where price is consolidating, you'll see it's around that 50-period moving average, which is currently acting as a resistance. But if you look further back in time, you can see at the same level we've had hesitation or consolidation, both as a resistance factor and as well as a support factor over the years. So there's something to be aware of. If I just readdress the chart, you'll see that price over here on the hard right edge is trading below the 50 and trading below the 200. So my directional trend is still to the downside. RSI, relative strength, is still plotting below the midpoint, so that's negative. And my MACD as a overall aspect is the fast line is still trading below the negative, the slow line, and the histograms are still below the midpoint, but they have weakened. But clearly we are going into, we have been trading within a consolidation, a wedge formation. Now I'm just going to zoom in a bit, just to catch the hard right edge. You'll see that over the last 2 months in particular, the March candle breaking lower than this level with a bit more sentiment compared to the previous months, getting below that all-important 50-period moving average. Now we want to see continuations of selling, especially towards a particular long-term aspect, which would be these target levels here, which was the 2015 and 2016 low point. Between where prices to that level, we're looking in excess of 700 odd pips. So there's a lot of bang for buck on time invested. However, on that bearish candle we saw back in March, we have not seen a continuation. So last month's candle closed yesterday. You can see it's an indecision candle, okay, a spinning top. So that's another sign that we need to be wary, because we've had spinning tops over the previous course of last year, and you can see we had pronounced spinning tops, indecision candles. We want to see a decision. In this case, it's come from a high point and is driving low. We're trading below both moving averages, which is another sign of negativity. We need to see decisive selling. Therefore, we need to see negative euro data or some very strong US dollar data to replicate that negativity continuation to the downside. So that's what we're looking for this month, because last month we had an indecision candle. The overall bias is still one of negativity. We're trading, as I mentioned to you, below the 50 and the 50 period moving average and the 200 period moving average. So our thought process should be looking for continuations on the downside. So there again, just going to highlight my 50 period moving average on this time frame, just to be aware of the major long-term support and resistance level. So there again, this level here, the 50, has to remain as my ceiling level, looking into the month of May and further on. So now if I drop down to the weekly time frame, refresh the chart. Okay, and that's the reason why the matrix gave us a upside candle, because we're starting to see a lot of bullish bias, even after a very bearish aspect of that continuation that we saw in the close of last week's candle. You notice here, you can still see we have swing lows. Okay, notice we're still trading below the 200 and we're still trading below the 50 period moving average. RSI is still below. MACD, unfortunately, is one of here that we don't have a clear indication. It's flat. The histograms are non-existent and the moving averages are flat. In any trend, the MACD should be getting stronger with the fall. Moving averages spreading out, histograms getting stronger. Here on both counts, the momentum is clearly not there, so there is a concern. If we look at last week's candle close, it was bearish. Therefore, we want to see selling. Currently, we're seeing euro strength. Okay, so there again, what we need to do is look at the macros, the economic stats, to see what's going to give us or fuel this continued selling. And what we have is this week we have the start of a new month. Today's the start of a new month. Therefore, this Friday, in 2 days' time, we should have non-farm payroll, US data. Okay, starting today onwards, we have a lot of data. The US this afternoon, we have the Fed's rate, we have the FOMC press conference. So the Fed Chair Powell is going to be speaking. We have ISM manufacturing PMI results. These are all important pieces of data, especially for the US market. Therefore, what we need to see is strong dollar data to continue to force the euro low. Other side scenario would be weak US dollar would then force further buying for the euro. Okay, that would then indicate we should be looking back up towards the 200 period moving average as our first viable target level for this week, as momentum continues to drive to the upside. But there again, we need a catalyst. We need to see economic stats that are going to paint that picture. So this is the importance of today, tomorrow, and especially on Friday. But today is the most important one because we have the Fed fund rates, which is stuck at 2.5%, which nobody's expecting to see that increase or decrease. We have, most importantly, we have the Fed Chair Powell giving his statement this afternoon. That's going to be an important one to look at. And I think everybody's going to be spending more time looking at what he has to say to give us a more general direction as to what we should be doing for the US dollar, especially for the month of May as it stands. So there again, keep an eye on that. Down to the daily, refresh the chart. Okay, where are my two moving averages? 50 still above price, 200 still above price, and our trend is still one of negativity. We have seen a pullback, however. That pullback is at the underside of the breakout level. So now we want to see that continuation. So breakout, pullback, now we want to see the continuation. There again, we need to see euro negativity, dollar strength. RSI is still below the midpoint. MACD, fast line, is still below the slowdown, and the histograms are still below. Look at the moving averages. They're spending more time below. So this is just a pullback and a negative trend. Because there again, we need to see a stronger sign of continuation, i.e. negative continuation. If she drives high and she closes above the 50 period moving average, then we should be looking back up towards my 200 period moving average as my first initial target. There again, the importance of today and what remains of this week is going to give us a viable direction for the month of May. So keep that on board when you look for further opportunities on this pair.